Following up on the Reserve Bank of Australia's interest rate decision, the Reserve Bank ultimately went with the 25 basis point rate hike, officially raising interest rates to 2.85%. The U.S. is set to make an interest rate decision this week as well. The United States Federal Reserve has its FOMC meeting tomorrow at 2 p.m. Eastern Standard Time. The federal funds rate is expected to be raised 75 basis points, with U.S. inflation at 40-year highs. The Fed has continued to raise interest rates in order to help cool inflation and keep the dollar strong, as some of the momentum seems to be slipping out from under the dollar. Now let's take a look at some US dollar pairs in the EdgeFinder.
All right, so here we are in the EdgeFinder, and we're going to take a look at US dollar pairs. So I'm going to select major currency pairs only, just so that we can see our US dollar pairs. And we have 3 buys, 3 sells, and a neutral USD CAD that is leaning towards the buy side. That's kind of why it's in this light blue box here. +2 scores, leaning towards buy. But yeah, so we have 3 buys, 3 sells, and a neutral here. As we know, our Australian interest rate numbers just came out. They raised interest rates 25 basis points. In the US, we are about to have interest rate decision again, expected 75 basis points. But let's take a look at a US dollar pair. USD CHF is our strongest buy at the moment with a score of 4. USD JPY in NZD USD are other good options as well. But let's just go ahead and look at USD CHF.
Black Friday is finally here, and that means that we're rolling out new products and brand new updates to the EdgeFinder. We have our new looking gold page, as well as our newest feature, the Fed Tracker, that predicts interest rate forecasts as well as inflation forecasts, and has things like US dollar impact, stock market impact, and gold impact. So you have more data than ever before when it comes to your trading. We hope that you guys enjoy the update, and if you want the EdgeFinder for yourself, you can use code A1YT for a massive 40% discount this month only,
because it is our strongest buy. So here in the USD CHF page, like we mentioned, score of +4, overall buy bias, and our COT data, or institutional trader data, sits at a score of +2, and we can take a look at those numbers right down here. US dollar COT data, we went over this yesterday, but it is 75.12% long and 24.88% short. Swiss franc, on the other hand, is 24.75% long and 75.25% short. So smart money traders are heavily short on the Swiss franc, heavily long on the dollar. So this is giving us indications of a nice buy here, institutional wise, buying the dollar instead of the franc. Retail sentiment has a score of 0, neutral score, and it's actually 50-50 retail-wise. 50-50 retail-wise. Seasonality score of +1. So here we are in the month of November, actually. Today is November 1st. And historically speaking, and in the current year average, we are seeing downward trends the last 3 months of the year. All-time average and last 5-year average showing sharp downward trends, and that is following suit in the current year average. We can look at October to November today, and we already are in a sharp decline. So potentially going to see even more downward momentum moving into December. Trend reading is +1. That just means that over the past couple of days or past couple of weeks, this market has been trending upwards. Although a +2 score would mean that it's really trending upwards. A +1 score just means that it has been trending upwards, but not quite as strong. Keep in mind, this is only a +4 buy score, which is a solid buy score, but not a strong buy. And then we are going to wrap up with our GDP growth, inflation, unemployment, and interest rates, which have scores of +1, -1, -1, and +1. We can come over here to the fundamental section and take a look at that. US dollar GDP growth sits at 2.6% compared to Swiss francs 0.3%. Unemployment for the US 3.5 compared to Swiss 1.9%. Inflation in the US 8.2 compared to 3.3%. And lastly, interest rates 3.25% compared to 0.5%. And keep in mind that with the Federal Reserve's decision to raise interest rates, we are expecting a 75 basis point rate hike, which would raise interest rates up to 4% from 3.25. Now, I wanted to look at something else in here just for fun. We have some new awesome features here in the EdgeFinder. If you don't know already, we are having our Black Friday sale. It is our biggest sale of the year. We are doing 40% off everything in our store. 40% off. You can get that with code A1YT at checkout in the store. We have new features in the EdgeFinder like our Fed tracker, which I'll have a in-depth breakdown video coming soon, but I'll go ahead and let you look at it here. We have inflation rate forecast, interest rate forecast, our previous quarter, quarter 3, quarter 4, and then going into quarter 1, 2, and 3 of 2023, we have forecasts for inflation and interest rate. We have those numbers down here as well as US dollar impact, stock market impact, and gold impact, and some arrows and lots of data, biases, things that I break down in the video that is coming very soon, but I don't want to spend too much time talking about all of this right now. I'm going to show you another new feature in the EdgeFinder instead, and that is our brand new gold page. And you can see that we have a similar looking box right here. So I will explain what's going on here. But let's just go ahead and take a look at gold. Gold is sitting at a strong sell bias score of -5. COT data is 0 at the moment because we're only sitting at 59.51% on the long side institutional wise and 40.49% short. So yes, favored on the long side, but not heavily favored on the long side. If you notice down here, our scanner output summary, which is a feature that is in all of our currency pairs, commodities, and indice breakdowns, is a little written summary of why we score things the way we do. Typically, when we score the COD data +1 or +2, -1, -2, it has to do with how long or how short. And so once you officially break that 60% range, that's when you get the plus or minus score. So because we haven't officially broken the 60% mark, we're still giving it a neutral score, although it is heavily favored on the long side. Not heavily, but it is favored on the long side. Retail sentiment is a +1. We can see that here, 37% long and 63% short. See, we crossed that 60% threshold, giving us a +1 score here. Seasonality, -1. In fact, everything from here on out is going to have a -1 score here. So seasonality, we can see November, it has just, wow, it has absolutely sold off tremendously from October, at least to start November. Trend reading -1. This market is definitely trending downwards. GDP growth, inflation, unemployment, and interest rates all have scores of -1, and we can take a look at that stuff here in our brand new fundamental section with these arrows that you can see. So if GDP is going up, typically speaking, that is going to have a negative impact on gold. We have this little disclaimer here. Please note these correlations are, please note these correlations are not perfect, and they are instead general observations. For example, if money supply in the United States increases, we have noticed a strong correlation in the rising price of gold. This could change in the future, but is something that we monitor closely. So yes, so things like GDP growth and interest rates, when you think about it, a lot of people fall back on gold when the US dollar is not doing well. If the dollar is doing well, they want to stick with dollar things, dollar yields and bonds and stock market and things like that, and they don't focus too much on gold. But when the dollar is weak, people fall back on gold because historically speaking, it's just kind of like a safe haven for the dollar when it's not doing as well. So GDP growth, if GDP is doing well, if the economy is doing well and raising the price and the strength of the dollar, then typically speaking, that's not going to be as good for gold. So we can take a look at our GDP here, 2.6%, not great for gold, so we're giving that a bearish bias. Inflation, if inflation is rising and potentially hurting the US dollar, then that could be good for gold. Same with unemployment. Unemployment typically means that an economy is not doing as well, which again leads to US dollar weakness. So if unemployment is going up, that is typically good for gold. Interest rates are the opposite. Interest rates raising means that they're fighting inflation, means potentially stronger dollar, means not as strong for gold. And then lastly, money supply. Typically speaking, again, like we just noted right here, when the money supply goes up, that is typically a good thing for gold. So we have all of our numbers here. Again, these are US dollar numbers: 2.6% GDP, 8.2% inflation, 3.5% unemployment, 3.25% interest rates. And as we know, the Federal Reserve is expected to raise interest rates 75 basis points up to 4%. That is a fairly large raise, which again is typically not good for gold, which correlates, stays consistent with this sell bias that we have here for gold. All right, so that was a quick little look at the gold page, brand new gold page, gold scanner here in the EdgeFinder. Again, if you want the EdgeFinder for yourself, you can get it for 40% off this month only using code A1YT during our Black Friday sale. Get that along with our brand new Fed tracker and all the other stuff that the EdgeFinder has to offer.
We're going to hand it over to live stream analysis from Trader Nick and Trader Jake.
Let's jump into the markets. Let's see what's going on a little bit here today. You know, actually, I got a text or a call from my dad here this morning, and he said, hey, the dollar's down. What's going on? So I think we need to take a look at the dollar. Let's take a look at DXY coming down here on the hourly and the 4-hour chart. Dollar seeing a little bit of weakness here. Question is it going to hold support? And this is going to be a key spot this week, I think. We poked underneath this level here. We poked underneath this level, closed outside of it. To me, that was like, that looks bearish. And I thought we would have more slip to the downside, but I was wrong about that with the dollar. We rallied back, and now as it trends back down here intraday, question is, will it find support at where we broke back above? You know, for me, overall, fundamentally speaking, I still like the dollar long, and I think that there are some opportunities to potentially to go with it overall on the long side. So I have some trade ideas. I have some things that I want to show you guys. And again, you can kind of see in hindsight, I was definitely just kind of missing this spot here where we did find support. So the dollar bullish thesis is not necessarily broken. We just seem to be taking a pause. And it makes sense, you guys, when we talk about the upcoming news event that we have happening tomorrow. Tomorrow we have the central bank, the Federal Reserve meeting and discussing their decision on interest rates. Of course, they will be releasing whether or not they're going to raise 75 basis points, 100 basis points, etc. And if you've been here on the streams, you know the song and dance keeps going on and on. They keep talking about raising interest rates. The rumor is out there. And then if you've been following it recently, the dollar tends to just shoot to the upside on the release as people continue to be confident in the greenback. So I wanted to take a look at that again. Nice rally off of this lows, and now, you know, with the pullback here today, the question is the dollar a pullback opportunity?
USD CHF is popping off. Pound yen, yeah, I'll take a look at all that. Oh wow, yeah, look at USD CHF here. So USD CHF actually would have made for a very, very nice long position down here off these range lows. So let's talk about USD CHF for a second, because I know Nick was kind of talking about this before, how this is a pair that was trending really, really well. It was trending amazingly, making higher highs, higher lows. Sorry, guys, for my hair. I'm having kind of a bad hair day, to be honest with you. But we were making higher highs, higher lows. Absolutely amazing trend here on USD CHF. And now we're kind of in this range. So we're obviously bouncing off these range lows, right? We're bouncing off these range lows, and now we're heading up to this next area of interest, in my opinion. And by the way, guys, Nick just sent in the chat, if you guys are watching on Trader Nick's channel, make sure you click over to the A1 channel. The stream is not ending, but it's just going to go over to the A1 channel for the rest of the stream. And he dropped the link right there in the chat. So you guys can just click over if you're on Nick's channel right now. My hair looks good. All right. Thank you for the confidence, Colin. You know what? I need a haircut really, really bad, but you know, that's a problem for another day. So right now, USD CHF is pushing up towards these highs, in my opinion, right? I mean, obviously, if you're long off these lows, great trade. You're looking very good right now. if you are not long off these lows, in my opinion, the next best opportunity on USD CHF is a break and retest of these highs right here. If we can get back above this level, I think there's a really clean range right here in between this high and this high. If we can break and retest here, we have about 100 pips on the table just up to these highs. And then if you can stay in that trade and actually break through these highs and that trend continues with some of that FOMC momentum, right, that could potentially be a really, really amazing trade to start the month. So that's kind of what I'm looking at here on USD CHF. Definitely going to be on my radar for potential longs. We just need to get above these highs, in my opinion. And if we look at the line chart here, sometimes it gives you a bit more of a simplified, simplified look at things. I think you can see that this thing is just trending up. If you get rid of the wicks and you just look at the way price has been moving, this thing is trending up. We have a very, very clear level here where these candles were closing. And if we can get above that level, in my opinion, it's going to be good for longs on a retest. Hey, what's good, Tony? What's good, everybody? GBP USD. Yeah, we'll take a look at GBP USD. And things are just moving here today, guys. Things are moving. USD JPY. We'll get to everything, guys, I promise. But first, let me take a sip of coffee. I was up super early this morning. I had some personal stuff to take care of. I wasn't even sure I was going to be able to make the stream, to be honest. But luckily, I got it taken care of, and here we are. But definitely going to need that coffee to power through. But let's go take a look at GBP USD. Gold, NZD USD, gold is melting here. Wow, guys, this is looking really good for some dollar strength. We'll look at dollar yen right now because the yen has been pretty weak. The dollar has been pretty strong. And, that's a perfect recipe for a very nice uptrend. So let's take a look here on USD JPY. Use this to get a very clean zone here based on the closures. And what you can see is we literally tapped down into this level with literally a wick that kind of front ran that area as well. And now we're just pushing up here very aggressively on dollar versus the yen, right? So like I said, the yen's been very weak. The dollar's been very strong. The gap between those two interest rates on these currencies is very big. And it's expected to increase tomorrow. So I think we're seeing some of that dollar bullishness get priced into the market here today. And we're seeing that reflect on USD JPY. So if we can get back above this level here, I would say this level. I would say this level because obviously this is that most recent high. However, we still have this resistance to contend with. So I'd say the safest bet is to wait for a break and retest here on this level to then get in some dollar longs, right? To get in some dollar longs versus the yen. I think that's a good opportunity there on dollar versus the yen. Just waiting now. Again, there's nothing here for me right now because the move has kind of already happened, right? And even though this was maybe a good opportunity, we had that 50% correction. For me, it wasn't reacting on any sort of significant levels, and I need to wait for some of these levels to get reclaimed, right? The dollar has been in a correction mode. We're just now starting to see that dollar strength come back into the market. And I have to wait to see some levels get reclaimed before jumping into longs.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.